Welcome everyone to a new update, and today we're going to cover everything you need to know about the current price action of Bitcoin, as we've got the non-farm payrolls on Friday resulting into a correction towards the weekend, while numbers have actually been bad. Before we're going to continue, make sure to subscribe to this YouTube channel if you enjoy the content and like this YouTube update if you enjoy this update, and we are back with daily updates. If you like what we do, we also have a trade letter with the latest altcoin setups, market information and market analysis. You can try it for free for 1 week and the link can be found in the description beneath. The same goes for our premium membership, which covers my personal trades, trade IDs and more. This can also be tested for 1 week for free, and in Q4 we are going to launch a lot of new stuff for that one. In this update, we'll be covering the recent price action of Bitcoin, but we're also going to dive into the reaction after the payrolls and unemployment rate. We'll discuss potential scenarios and important events for the coming months. First, we'll dive into the big event of the week, which was the non-farm payrolls from last Friday. The unemployment rate and payrolls Friday was the big day for the markets, as we're coming in with non-farm payrolls and unemployment rates, which are usually a big decision maker for trends and for policy adjustments from the Fed. Therefore, the entire week was extremely boring, aside from the jobless claims, which came in way more positive than expected. On the other hand, continuous jobless claims kept rising, which isn't a positive signal, as those have been rising from 1.412 million towards 1.438 million. Traders and investors should understand that nowadays markets tend to lean towards a bad is good environment, and the current policy of the Fed reduces economic growth and inflation, which makes future perspectives for companies harder at this point, and therefore you can see the significant drawdowns across the board as the Nasdaq and S&P are dropping heavily. This has shown that we are beneath the 200-day MA moving average for more than 100 trading days on the S&P. This is the worst since the financial crisis as well. And on Friday, the data came out regarding unemployment and non-farm payrolls. The payrolls for July were 526k, while in August the number came in at 315k, expected to be 297.5. You'd say that's something positive as we beat expectations, but the number has been falling down significantly with 211,000, and additionally, unemployment rate has been rising from 3.5% to 3.7%, the highest since February 2022. In that case, with those numbers, the markets have been shooting upwards significantly after resulting into some gains across the board. Yields have been falling down, as long with the dollar, which has also been dropping significantly. But why did the markets go up? Well, it's very simple. If payroll numbers are falling and unemployment rate is shooting up, it means that the markets are cooling off and labor markets aren't as strong as everyone expects. And then the Fed could be pivoting from QT towards quantitative easing and lower the hikes, through which risk-on assets become more attractive. That is not the case, as investors are still expecting a 75 bips rate hike to happen in September and potentially another 50 bips rate hike in October. However, signals across the board indicate that the markets are actually slowing down significantly, but the markets aren't pricing that in yet. On Friday, we've not only got the unemployment rate, but also data regarding the factory orders, which have been falling heavily for the first time since April 2020, as they dropped by 1% in July. Just a matter of time until weakness of the economy will start to show in the charts and the Fed has to pivot. But what has caused the recent drawdown of last Friday night? Well, reason behind the sudden correction of last Friday wasn't the payrolls data. It was not Biden speaking, it was actually the G7 and Russia causing some reactions on the markets. Shortly after the payroll data came out and the yields started to fall, which they are still doing, the G7 came out with news regarding the price limits on Russian oil, as those agreed that they'll put that on. In response to that, a potential leak closed down Nord Stream 1, which is putting the markets onto more risk and fear due to the increased tension between the Western world and Russia, leading towards the heavy correction going into the weekend. Technically speaking, if this didn't happen to the markets probably have closed way higher and with a bang, as we saw the rally, as the payroll and factory order data are already signaling a reversal on the policy for the Fed. It is likely that we'll hike in September, but it's not likely that they continue for a long time with this policy and that a reversal on top of the dollar is coming in the next weeks to months. Next important moment is the CPI data on the 13th. However, the correction has been taking place in the last hour of the markets. Firstly, long weekend ahead of us with Labor Day kicking in on Monday, as there won't be trading in the US, and this combined with the issues between Russia and the Western world, most traders want to remain flat. The markets are still in a downtrend, as we now see that Bitcoin is still down 80% since the all-time high of 69k. Nasdaq has been falling apart and some indicators have been signaling that a bottom is near, as you can see in the chart in the screen. This chart indicates that the Nemo indicator, which is one of the most common used indicators in the Nasdaq and should be used alongside price action. However, the number of -113 is the lowest of this year and actually the lowest since March and April 2020. Those have been marking the bottom of the corona pandemic outbreak, in which markets have been tumbling down. What does that mean actually for crypto at this point? Well, as we have discussed in the video from last Thursday, strong dollar is not helping Bitcoin a lot, and the dollar has to reverse. We are still on a run for the dollar, and as we can see that on the charts, and we have to reverse quite shortly. The monthly candle of the dollar is showing an RSI we've only seen in February 2015, which marked the bottom of the Bitcoin bear market, and in 1985, showing the insane strength we are currently seeing on the dollar and the fear across markets. This month is decisive, and if CPI comes in worse or Fed will be dovish towards the future, a sharp sell-off here and in yields is most likely what we'll see, resulting into strength on risk on assets. The weekly candle of the dollar shows a potential bearish divergence, but remarkably the dollar has to break beneath 108 points on the weekly to confirm this, and first has to drop beneath 180.6 on the monthly level in order to start signing the songs of such a reversal. Crypto as a whole has been crashing significantly, and Bitcoin is looking like it wants to tumble even more. Definitely the dollar and the Fed will have a significant impact on the markets, but if we look at on-chain data, we're getting there and we might have seen the low already. This chart from Real Plan C shows the peak network capitulation, which reached a number of 5 in last capitulation, which is higher than any crash in the markets for crypto since 2018. Next to that, the deep value cross signal, which is the delta price divided by coin value days destroyed, signaled a cross which often led to a mark of the bottom, which has happened in June and July already. I'm not claiming that we are looking at the bottom and that we have been finishing with the correction, but given the current financial numbers and the essential months approaching plus the current data on chain, we could be looking at such a case as long as the total market capitulation holds the 200-week MA and Bitcoin remains above 19k with this weekly candle closes. So it's time to dive into the charts. When we are diving into the charts, we got to the same conclusion as the update on Thursday. In this update, we are going to cover a few important topics that we have been seeing move during last Friday. First of all, weekly chart for Bitcoin, which is showing us the previous all-time high is still resting as support, and we could be seeing another fall beneath that level to sweep it to create a bullish divergence, but as long as we stay above here, everything is fine. If we're going to get another fall, it seems very likely that we're going to reach ourselves towards 12k. However, the entire markets are looking for 12 to 14k, which makes me believe that it's going to be quite hard to actually reach that number, especially since we have not been getting any bounce in the correction here. Makes me believe that the pain scenario is not on the downside because of most people losing or selling their positions in this range, looking for lower levels to buy. I think the max pain scenario is on the upside, and also apparently everyone is expecting the crisis to happen already. Maybe it's not going to happen as everybody believes it will, but yeah, there are tough times with the economy at this point. But if we're looking at Bitcoin, definitely seeking for at least some tests here. First of all, I'd say in the last video that I preferably wanted to see strength on the weekly candle, which is not the case. We are not making an engulfing all the way towards 21.6. So it makes me believe that we drop beneath the lows here, or at least drop beneath the level at 19.3k, sweep the low, and then the reclaim is a trigger for continuation. And then I'm assuming longs towards 28 to 30k are next. And then we also get a confirmation of the weekly bullish divergence, which apparently we have not been having as a whole in the markets over here since the crash in 2017. We've also not been seeing it at all. So we don't technically have to have it at this point, but it looks like we're going to have some retest aiming for such a thing. If we go back towards Friday, we have already seen that the dollar has been showing some strength. So based on the weekly time frame, I'd want to see it drop beneath 108. Based on the monthly, I'd want to see it drop beneath 108.6. And if we look at even lower time frames, we were already trying to drop beneath the crucial level as we had this beautiful run here on Thursday. Then we had a fall back down because of the unemployment rates and payrolls, which was ready to nuke even more, getting towards 108 points, and that would result into more strength across the equities and crypto markets. But crucial level held and we bounced back up. So we are still waiting on how Monday and Tuesday are going to open here, whether or not if we're going to create the bearish divergence here, which might be signaling that we get towards the top on the dollar. Looking at the yields, we are seeing strength, although we did not see that much strength coming out of today or coming out of Friday, in which we saw a correction, and the yields have been dropping for 3.3 towards 3.19%, and also the short-term yields have started to fall down, as we can see here with a significant drop from 3.51 to 3.939, which is a drop of 3% on the day, which makes me believe that we're going to get even further corrections on the yields in the coming weeks, which might imply that the Fed is getting into a territory where it has to reverse. So the factory data and also the unemployment rates are into the charts here. Going back towards Bitcoin, the weekly time frame, we already know we've got a heavy support zone here. Looking at the daily time frame, we've got a few questions to ask. Right now we're still stuck in this range, which makes me believe that somehow we are going to get into liquidity grabs, which you want to get beneath the levels here at 19k and then reclaim, and then we can start continuing, or we clearly have to break 20.4 and then we start breaking 21.5 for continuation. So these two scenarios of buying the flip at 21.4 or the reclaim at a sweep at 19k are definitely the triggers. When we're looking at Ether, technically strength, we are still doing fine, consolidating here, assuming that we hold above 0.05, we get continuation on Ether, in which I'm assuming that if next week's is going to be getting a slight reversal on CPI data or on the markets, as the Russia fades or Russia fears are going to fade away, and the US economy and investors are actually pricing in the fact that it's slowing down, we probably are going to see continuation of strength on the risk on assets. But that's just speculation, and if we do, Ether is going to be shooting off quite fast, as ETH merge is going to happen on the 15th or even faster. The CPI data comes out during that week, and also Mt. Gox starts with selling their positions or at least people can get their Bitcoin, which probably will still take months to years to actually get it for everyone. But it's going to be a decisive period during that month, especially as if the CPI comes in lower than expected, the Fed might be applying or implying that they reverse the policy, as PCE came in lower already. ETH Bitcoin showing strength, 0.05 is the area to hold. ETH USDT still following this scenario, might be looking at creating a higher low here before we can start turning into significant continuation. So that's the view of the markets at this point. Let's get towards the conclusion of this update. I hope you have enjoyed this update, in which we have been covering the recent data of the unemployment rate and payrolls. We have been covering what we are expecting for September, and we have been discussing a few scenarios of Bitcoin, which is relatively boring at this point, and our thought process of why we are expecting us to be relatively close to the bottom and where you can start building your portfolio and investments. And if you want to improve as a trader, know that we are going to improve our platform even more in the coming months. Check out it beneath where you can trade or use it for 1 week for free. And if you don't have the budget, the trade letter gives you the kickstart in the markets with all the altcoin setups and more, which you can also check for free for 1 week. Make sure to subscribe to this YouTube channel and also like this YouTube update if you have enjoyed it. Coming week on Monday, I'll be going live at 10 a.m. final time, because after that we're going live on Monday and Thursday at 7 p.m. and every day, Tuesday, Wednesday, Friday, Saturday and Sunday, we're going to post an update on this YouTube channel. Lots of improvements, don't do stupid shit, enjoy the race of Formula 1 today, and I'll see you again tomorrow. Ciao!